everyone, welcome to Intraday video update. We have seen some interesting moves overnight during Asian hours. We have seen a sell-off on stocks which pushed Japanese yen to the upside, so I want to update you really quickly. That's why I decided for this video. So actually I want firstly to take a look on pound yen. So pound yen came to the downside very nicely from this resistance area that we talked about last week. We also shared the EPO after evidences of a corrective rally here on an hourly chart, which unfolded actually as a ending diagonal in the final stages of this recovery. So reversal to the downside is looking very promising. Notice that a market actually accelerated to the downside after recent break above below this base channel, and earlier also below this corrective channel support right there. Okay, so actually we have a double channel breakout, which means that we are probably in an impulsive decline here. Also this divergence was very important here. You can see the RSI was trading lower while we have seen higher swing highs here, but then this extended divergence line also reacted as a resistance right there for this small wave 2, which was actually a flat correction. So for now it looks like that we are in wave 3, so expecting this decline to continue further back towards these lows from start of April, so from start of May, because that's actually a low of this wave 3. So if we suspect that wave 4 is finished, then continuation should resume for wave 5 back to these lows. And also if we take a look even further back, then we can see that this was also a corrective rally from March lows. So even these lows should be taken out, which means there is room for another almost 300 pips of decline from current levels. We also have CPI, UK CPI numbers coming out later. This will be at 8:30 GMT. So expectations is 2.5%. So if data misses here, then I think that this pound yen could really be a big mover of the day. Okay, because we already see dollar yen weakening. So if we get bad data for pound, then as you know, cable would come to the downside, which would make very sharp extended legs down on pound yen. Also, I think that we have seen some move to the upside or stronger Japanese yen is probably because of 10-year US note. I've been talking about this for a while, that we are expecting a reversal, which means move to the upside on 10-year US notes, which means that yields are coming to the downside, and this also sends to the downside the dollar yen. So I have been talking about this channel here on dollar yen based on correlations that we have. We can see the 10-year US note prices are rising, so dollar yen made a nice break below this channel support. So actually this helps pound yen to come lower in this very aggressive fashion. Now the next thing that I want to take a look at is also a stock market, which again is also helping Japanese yen to rise based on the risk of sentiment. So I have been looking for a decline into a third leg, because here down from May 14 we actually seen only first leg of decline. It can be wave 1, it can be wave A. I'm still not that bullish on stocks. At least I think that we must see some kind of a deeper pullback. So for the short term I will remain bearish on stocks, or at least sideways, definitely not bullish here at these levels. So I'm expecting more weakness after this wave B or wave 2 completed this rise at the recent swing high. So watch out for this corrective channel support line here, connected from 2700 up to current levels. So you can see that we are now sitting or testing this trend line. So I would not be surprised to see even further weakness, which means the risk off could continue for the next maybe 24 hours or so, which means Japanese yen could rise even more. Also DAX, I know that DAX is very bullish, but again I'm very tired of tracking this wave count because we don't see any aggressive movement in the last few weeks, but still I just cannot be bullish here if we are in a wave 5. I want to see some lower pullbacks, and then I see if we get a 5-wave decline, then I know that bigger downtrend that was seen from February highs will continue. If we will see only a 3-wave decline, then I know that we will be starting building maybe opportunities on the long side. Okay, but for now at this stage we can see prices trading at resistance. Also our chart has 5 waves to the upside here, so definitely I would be looking for prices to come a little bit lower. And this everything, of course, suggests that Japanese yen could rise. Now let's take a look also on euro dollar. Now euro dollar reached some interesting levels. Here on the daily chart you can see that we are testing this 38.2% fib level, but there's still room for more weakness into this trend line support, which is actually last do or die level for bullish trend to still remain in progress. Of course, I'm observing the idea that the top has been placed in here, but still based on the 4-hour chart, because of 5 waves of decline, I think that the reversal may occur still, or bottom formation by the end of the month or at the start of June. So at these levels I think that going short market is a little bit risky, but however another low can be coming here, because if you take a look on the 1-hour chart, here you can see that there was only 3-wave corrective rally from the lows, so more weakness can be coming. Now if you want to be placed on a long dollar side, then maybe watch out for some clear structure on different markets. As I said, euro dollar is a little bit too low for my taste, so what I want to look at is maybe Aussie dollar. So Aussie dollar, as you can see, was very aggressively trading to the downside since start of the year, and it looks like there is more weakness coming because of a break below this ending diagonal trend line. So I'm expecting market to continue at least down towards this level, which was swing low from a year back actually. So I'm expecting more weakness here, and the reason of course is this rise, which looks like a flag. In Elliott wave terms I label this as an ABC, so it's a zigzag with a triangle and wave B. So this triangle was actually key for an upcoming reversal. I posted this wave count yesterday when we saw this breakout, prices were trading here. I said that probably we are moving into this yellow box resistance zone, which was actually made by this upper parallel trend line resistance, and also 61.8% of wave A measured from end of a wave B. So we have seen a very nice sell-off from here, and also notice that we have moved back below this wave, this swing high. So maybe if you were tracking for yourself some kind of a bullish wave count and you thought that we are now in a wave 4, then you know that this bullish wave interpretation is now invalidated, because we have traded into wave 1 or wave 2 territory, okay, which is not allowed with a wave 4. So actually this just confirms the fact, when bullish count is only invalidated, that any bullish alternate interpretations were invalidated. This just confirms the fact that we are probably on the right side with the bearish wave count, okay. Also I extended this triangle resistance line from a wave B, which is a lot of cases very important evidence for a continuation to the downside, okay. So I would not be surprised to see even more weakness. Watch out for intraday pullbacks, but I think that today's close should be very important, because this sell-off occurred during the Asian or Australian trading hours. So actually what it matters is where we see a daily close price. If a daily close price will stay around these levels or even lower, then I think this bearish turn is confirmed. If from any reason we are going to see higher prices and this previous whole decline would get erased, then obviously at the end of the day bulls would be strong. So actually this decline will not matter anymore, okay. So in such case bulls would be back in play. So that's why when I'm trading I pay a lot of attention to daily closing price. This is the most important price of the day, okay. So actually watch out for more weakness if we close below this trend line. Also gold, I'm expecting some kind of a potential bounce on gold. because we are sitting on this 2016 trendline support. Also, this recovery should be made by 7 swings, right? Because it looks like it's a corrective in nature. But so far we don't see any confirmation that this flat formation for a wave B is finished, because this rise on an hourly chart here is not that strong. It could be unfolding as a potential bigger impulsive turn, but still I'm not convinced by this current rise. Okay, we also felt or turned down recently from these fourth wave resistance levels, which definitely should be taken out for this bullish trend to continue. So as long as we are trading below these swing highs, I think there's still risk for potential continuation to the downside, especially if Aussie will remain weak, because these markets are somehow in positive correlation. So for bullish case on gold, to start building maybe some longs here, I definitely need to see more confirmation from this market that low has been formed. So in such case, I would rather stay focused on a 4-hour chart and watch out this trend line resistance. Once we take out this trend line, then we would have enough evidences to say that this 5-wave decline completed wave C, which is actually then part of this big flat formation that we are tracking down since start of the year. Okay, so watch out for this gold, how will respond here at current levels. Also, the last market that we will take a look is crude oil. Now in crude oil, I've been talking for a while now that we are in a 5th wave here, final stages of this 5-wave advance on a 4-hour chart, which actually is part of even higher degree 5-wave structure. And we have here a nice divergence, as you can see on the RSI, so I would not be surprised by a turn. And we know that after every 5 waves, market will make at least 3-wave setback. And also, if you consider this wedge shape or an ending diagonal formation, then we really should be aware of potential significant decline. I see that sentiment is increasing a lot here. Some are already calling crude oil for 100, but they were nowhere to be found, this type of analyst, when we were trading 50% lower. So actually, I think that a lot of traders, investors are looking for this bullish trend to resume too late, and normally that happens at very critical points. So I would not be surprised to see a turn to the downside, at least in 3 waves. Okay, so if we can take prices back below 70, I should look at this one, back below 70.80, I think that this could really mean that top has been put in place and that more downside could be coming. So in such case, I would be tracking pullbacks, especially if dollar would maybe stay strong, because at the moment markets are not in good correlation with dollar and bullish crude oil. So if dollar will continue to rise, I think that crude oil sooner or later could be put lower. Okay, traders, thank you very much for your attention. I hope you enjoyed this intraday video. If you have any questions, catch me in the chat room and I will be happy to answer. Bye.